Hello everyone, welcome back to the channel. So today I have the honor to have Ondrej Sluchenko. Did I butcher the name?
The second one, but the first one was on point.
Okay, good. So he's a very interesting fellow. I first saw you on the Finance Junkies, I believe. And you are, as far as I know, helping Jeremy run financial education, Jeremy run behind the scenes his programs. And you have a very impressive stock portfolio for your age, because you are, as far as I understand, 26 years old. And
That's
when,
correct.
yes, and your portfolio had highs into the 500,000, right?
On a good day, yeah, it's around that number.
Yeah, exactly. So that's very impressive, I think, for a 26-year-old. And I was thinking we could have a chat about, your story, which I think is a very interesting story, and then your investing philosophies and what do you have in your portfolio, and then we just go wherever the conversation takes us.
Definitely, let's do it, and thanks for having me.
Yeah, you're very welcome. So could you introduce yourself, tell us a little bit about how you got into investing, and a little short story?
Yeah, 100%. So, basically, I started investing back in 2017 when I was still at university. And, when you are a student, you're kind of in a very precarious position either way, right? You have to finance the study somehow, find a way how to, pay for your accommodation and everything, which of course, can be sometimes a little bit stressful and also intimidating. So, of course, I try to a little bit look ahead, right? And how to put myself in the best possible position moving forward. So basically I had to have, some kind of a part-time job. Back then I was working in a restaurant, those 7 years ago. And, whatever I could, whatever was extra, after paying obviously for my rent and these kind of things, I just simply invested, right? And started a little bit more on that safer side, started with indexes, a couple of those big companies like Apple, for example, back in 2018, right? When it was, the valuation was relatively compressed compared to what Apple is obviously doing now, right? Where I would almost argue that it's overvalued. But basically that was the start, right? And that's also what I often, recommend to people that want to start investing, because people often do either of the two mistakes, right? Either they kind of go recklessly into it, it's 2021 and there's a GameStop and AMC, and they just dump a bunch of money into the market without much thoughts. Or the other way, right? Sometimes people are like super scared, just index fund and oh my god, the stock market, that's something for.
Dividend stocks, 20 something year old investing in dividend stocks.
Yeah, exactly, right. These kind of
Yeah.
very quote unquote safe strategies, or they just simply think that the stock market is for something for the guys in the suits and ties, right? And the truth is somewhere in the middle, right? So, of course, we need to spend certain amount of time, certain level of effort, but the people that are willing to do so are the ones that are getting the results, right? So over time, I, of course, started to learn, bits and pieces from, a couple of those smart books behind me, of course, from other people that are talking about investing, whether it's Jeremy or eventually, other creators, or also, following some of the investing legends, Bill Ackman, let's say, comes to the mind, and kind of see, how it's done in practice. Because investing, it's not something that's, can be taught in the university or something. It's more like apprenticeship, right? You kind of
Yeah.
see how those people that already did it before you, how they get to that point, right? And then you try to kind of replicate it and apply some of these timeless principles onto the current contemporary companies. And then that, of course, continued, and you just continue with it month in and month out, keep putting money into the market, keep learning, and over time, as long as people stay consistent, it really, those 6 figures, eventually 7 figures, it's not that big of a hurdle, right? But it needs that consistency first and foremost.
Yeah, cool. And so you are working with Jeremy behind the scenes. Is that your full-time job, or is that a side gig for you, or?
Yeah, basically at this point, it's my full-time job. So, of course, Jeremy is one of the biggest creators. There is a little bit like a small team helping him to, of course, Jeremy needs lots of time for his own research. That's kind of that alpha and omega in a sense, because I mean, you can even see that you probably get that feeling from Jeremy when you see his videos. It's not something that's like super overly polished. It's mainly really focused on that information, right? Because it also of course works for him, right, and for his portfolio, and he wants to have that long-term track record. So the results first, and the all of the other stuff needs to be also taken care of.
Yeah, I actually really like his videos, but it's more like I watch it as a routine every day, but it's more like to see what he thinks about the market, because he has like such interesting viewpoints about, and I mean, of course, you don't agree with everything that he says, but one thing that I really admire in him is when we were going through this bear market, in 2022, and he every day he was like, yeah, you gotta be buying when it's a cheap, it's a cheap deal, you gotta be buying. And the funniest thing happened is I remember he made a video in November or something, and he said like, I'm done buying, I have so much money now in the market, and he didn't say he has been burnt, but he said that it was like an emotional toll on him. And I remember I tweet it, or maybe like YouTube commented it, that when such a bull stops buying, it must be the bottom of the market, because then there is like, and it freaking was. So he's my Jeremy indicator, like when he stops buying, like, okay, that's the bottom of the market.
Oh yeah, definitely, I remember that one. And that's also really one of those also things, right? I mean, even now the market corrected maybe like 10% yesterday. I mean, and today we finally had a green day, right? But yesterday was kind of that,
Yeah.
probably
But by
like a
the
low.
way, I love the tweet that you did today. Can you show that on the screen? It's the bear market that you approve of. It cracked me up. It was one of those things that let me
Yeah,
just
definitely.
show the.
Share the screen. This one, right? So of course, we have to have a little bit more fun with the market. So if you want to, definitely follow me on Twitter/X. I'm posting regularly my portfolio, some of my more thoughtful takes. This is obviously the more of the meme-ish side, but
Yeah.
it's also one thing about the market and investing, right? We want to make it a little bit more approachable, a little bit more fun. I mean, of course, it's also about the numbers and the financials and the P ratio and price to sale. We have to understand that part as well, but also just make it, and also kind of both enjoyable, but also kind of like psychologically
Yeah.
prepare ourselves,
The,
right? As you were
the,
just talking about the bear market.
exactly, because this is what I wanted to tell you when we were in private, and I said that it would be better on live. That what I thought so funny about that tweet is that I don't know if it's the same with everyone, but I get the, like, when it's a red day, I feel quite sad, and when I see my portfolio going down, like, I feel quite sad. But analytically, I understand that this is like a buying opportunity. So the correct reaction that we as investors should have on a red day is this little girl who's dancing around the bear, because it's really amazing. Like, you can buy, I mean, on Palantir, for example, I showed you my portfolio. That is basically 80% of my portfolio. And I kept averaging down as the stock was going down. But it wasn't an easy thing to do. Like, I was like, scared, and I was hoping, like, you look at the wall and you see that, okay, this wall is white, but then when everybody's telling this wall is black, then at one point, like, am I delusional? But okay, I have to act on what I have learned. And this is where, so many YouTubers are amazing, like, reminders of this, that you have to just keep investing through the bad times. And then, yeah, when the good times came, it was freaking amazing. But how do you like, how have you learned to deal with this emotional side of investing? Because when you have 500,000 in the market, I imagine that you have days when you go like, I don't know, $30,000, $40,000 up, and the same down. And yeah, How do you
Yeah,
deal with this?
definitely. They are kind of, I think some of the extremes are plus minus 20,000, I would say. Of course, also when Palantir is quite a volatile stock itself as well. And and I think that's a definitely great question. And it's one of those things that's almost like a hardest to learn in a sense that it cannot be really, like conveyed, right? Of course, you can
Exactly,
learn what is
exactly,
P
exactly.
ratio, price to sale.
Exactly. You have to live through a few bear markets to really understand that you can time the
Mhm.
bottom. When everybody's afraid, you're also going to be afraid, and you still have to you still have to buy.
Yeah. Because what I basically found out is that as time goes by, it starts to be a little bit easier and easier, right? So kind of the first bear market, or kind of like the bigger correction slash bear market, was actually back in late 2018. I think kind of market was going down and down
Yeah,
into the
yeah,
Christmas. So that was actually the first kind of taste of this feeling. And of course, at that point I had just a relatively small portfolio, but it was big compared to obviously where I was at that point. So that almost felt the worst, let's say, compared to the last year. Last year I was already relatively seasoned, and it didn't influence me that much, right? Or let's say we go back to 2020, where the first COVID crash, and that one was super quick, right? It was kind of done in like the 2 months ish, and then the market slowly started to recover, and then everyone was suddenly surprised that okay, we are going like steeply up, right? So, and that got a little bit easier, and then of course comes 2022 last year, and now it just comes to be, of course, feels bad, but at this point you kind of train yourself so much that it just gets easier, and with time and experience.
yeah. Awesome, awesome. Okay, so I want to speak to you about specific positions that you have in your portfolio, and what is your bull thesis? How long do you hold it? I want my channel viewers to kind of see inside your head a little bit, and your trading philosophy. So um, yeah, I let you speak about this.
Yeah, definitely. So, of course, it also evolved a little bit over time, but generally, as kind of a guiding framework and principles, I'm, of course, picking individual stocks and try to have relatively streamlined portfolio. I would say something between, 8 to 12 stocks is relatively kind of that like a reasonable number. Both, of course, if when you are having basically two stocks in your portfolio, that's for me definitely on the risky side, right? But then,
I also just have to tell you that the reason why I have two is because, like, in my head, I was going to have chunks of money going to the stock market, right? And then, so the first chunk of money arrived to the stock market. I'm a real estate developer in Sweden, and yeah, our industry is not the hottest right now. So the financial plans didn't happen exactly as I thought that they would happen. So in my universe, the money that I invested into Palantir was like 10% of my coming future portfolio, and then when the money was on the stock market, that was the stock that I researched, I had the conviction in, and then I was like, okay, good, build out that position, and then new money is coming, and then more positions will be built out. But that money that is coming, hopefully, is still coming, but it's very, very late. So that's how I ended up. Otherwise, I agree
yeah.
that it's crazy to have such a concentrated
No,
position.
yeah, definitely, I understand, and that's also, in a sense, the way how you outline it now. It's also, I would say, a good principle to build out your portfolio over time, right? Maybe when we are in our first year of investing, pick maybe 3, 4 positions we want to build out, learn how to actually do the research and everything. So hey, let's say by the end of first year, you have 4 stocks in the portfolio. Next year you add another maybe 2 positions, maybe add to some of the existing one. So it's kind of like a slowly ramp up, kind of that reasonable level-headed approach. Because then also, once your portfolio is a little bit more built out, as mine is at this point, where I have plenty of position which I'm very comfortable with, I'm not necessarily adding more, I'm not selling them. So if I wanted, my only goal for this year could have been, hey, let's find 2 new positions, and that's it, right? So of course, sometimes when people, we are busy with our work, families, hobbies, and everything. So that's another kind of the point for, hey, it doesn't need to take some crazy amount of time to take care of your portfolio, but it needs some of the time.
Yeah. So how much time do you spend a week on your portfolio? Like,
Yeah, I mean, hard to quantify, right? Because obviously I'm living in this ecosystem of, on
yeah.
Twitter, creators, Jeremy,
It's funny. It's zero
talking.
time to hold, right? So
Yeah,
technically you don't have to spend any time, but we still do.
yeah, exactly. So, if if we are really talking like, hey, I'm going to dial in, I'm going to, take my pen and paper, make some notes, or I have, a couple of my positions in the spreadsheet, some of my own numbers. That could really be only, and I'm talking at this point, right, where my portfolio is kind of in a position where I want it. But now I'm basically, hey, every month I'm doing like a big checkup on the first of every month where I spend, maybe half a day with it, just checking everything. Of course, when my companies are reporting earnings, I listen to the earnings call, this kind of stuff, maybe review my numbers. But at this point, it's not that much. But of course, when I was starting back in 2017, 18, it was this plus all of the readings and everything, so that was more time. But generally I would say, for like the basically any kind of person, if they can find those maybe 5, 6, 7 hours a week, that's enough to take care of like a reasonable portfolio with those 7, 9, 12 positions, kind of like the retail investor that actually gets some decent results. They should expect those 5, 6 hours a week, maybe at least staying on in touch with the market.
Cool, cool. And okay, what makes you buy a stock? So what is it that you like to act on? How much research do you do before you buy, and how would you size your position
Yeah,
into a company?
so first and foremost, I'm quite, it really takes me often quite a long time to get comfortable in a position. So, for example, my biggest position at this point, Palantir, I've been basically uh, you know I was watching the company since it went public. I had my like little tiny position when it went public, but I only started by heavily kind of the basically the whole last year, kind of averaging up and down when it was between those 11, 9, 7,
Yeah, nice,
6,
nice. Same.
9, 11. So
Very
kind of
nice.
through the whole range, right?
Yeah.
But that's of course a little bit exception. I know that it's such a popular company, both on Twitter, Facebook, YouTube, and this kind of like the retail investor community.
You
But
know,
it's
it's
actually
so
one of
funny.
the most complex companies
Yeah,
to
yeah.
research.
You know, I have a very similar story with Palantir that like I was in around the YouTube community, and then you hear this Palantir, and then I didn't think anything of it, right? It was like $24, I think. And then I
Mm.
saw this Tom Nash who was like, yeah, it's such a good value. And it went down to $20. So I'm buying more, you know? And then I still didn't think anything of it. And then, you know, the market was falling, and then it came down to 14, you know, and Tom Nash was still going like, I'm still a believer. And then he added like 80,000 to his position. And then it went down to, what is it, $11. And I was like, this is interesting. So a lot of people saw that this company was an amazing company at 24. And then they added at 20. And then they, you know, then they capped average. And that's when I really started looking into the company. And then I was like, wow, this is an amazing company.
Yeah, definitely. Because with the benefit of hindsight, of course, Tom Nash and plenty other people were a little bit too early. But that also where that the financials also comes into play, right? So I usually like to start with more on that qualitative side. That's, for example, what brought me to Tesla back in 2018, where I was really focusing a lot on the engineering and watching some of the tear downs of Model 3, right, and all of this, and basically seeing, okay, Tesla can manufacture this vehicle where maybe they have like a, I don't know, when I vividly remember this moment when I was listening to some podcast, and it was basically telling that, hey, Tesla in the vehicle, they have like a 20 meters of wiring compared to like the normal car, which has like a 200 meters.
I
And I was like,
remember this
okay,
also.
so yes,
Sandy
so they are
Munro, right?
making, yeah, most likely there were multiple. And so basically in my head it was like, okay, so they are using basically 1/10 of the resources, which also means when you don't have to go all around with that cable. That's also basically 1/10 of the workforce, right? The time and everything. So how that scales over time, right? All of this, like this extreme efficiency. And then of course, start with the qualitatives, but then you also have to check with the financials, right? Where with Tesla back then, that was a little bit that, much more trickier scenario, right? Which also made a lot of people, I suppose, at that point, quite well, either like completely negative on Tesla, all of the short
I'm very
sellers.
curious. What did you see in Tesla financials? Because Tesla is one of my biggest investing mistakes that I missed it. And again, knowing what I know today, I would have never missed it. But at the time when it was happening, I was thinking like, okay, they're an auto company, and like they were losing money, and I'm like, even if they turn profitable, then they will have like 6% profit, and then like, what's the big deal, But so I'm very curious, how did you model at that time? And I'm guessing that Tesla surprised you to the upside, maybe. There's very few people who thought that the stock would 10x.
Yeah, it definitely did. And it was a little bit that conjunction of, on one hand, obviously the engineering. And for the financials at that point, I remember when, Katie Wood first published her report, and they have basically that, like an open source, super big Excel spreadsheet with this Monte Carlo simulation with all of these assumptions. So I basically tried to, a little bit like simplify the numbers to, really put it into kind of like a napkin math, if it makes sense in the big picture, right? If this girl over there, Katie Wood, if she's somewhat believable. And when I was starting to invest in Tesla, like if I was looking into Tesla maybe in 2015, 16, that was still, the moment where they were losing so much money. That would probably, I don't think I would feel comfortable at that point. But when I was building my Tesla position, there were like so close to profitability that I could, when I actually modeled it out, I realized that, okay, in probably maybe 2-3 quarters, it looks like they are going to be profitable. So the bankruptcy at this point, even those short sellers are still being super negative, the numbers are now really supporting kind of at least that profitability. And also, like oftentimes, and this is a little bit more like, I would say, like an advanced investing strategies, but if people can figure out when that profitability flips, and if you can invest maybe like a 2-3 quarters before that, when the Wall Street is not yet seeing that profitability, but you can kind of see it, that's also when the stock price often appreciates in a short amount of time, as happened with Palantir this year, basically, right? Flip to profitability. Okay, we go up 100% in relatively short period of time.
Okay, cool. And do you still have those Tesla shares, or did you phase out of those shares? Or
yeah, I still have all of the Tesla shares, never sold any, which of course,
this is amazing. That's kudos, really kudos.
It is on one hand, but of course, over time, Tesla, has been such a wild company, which, kind of on one hand, if there is someone who can time the market, individual stocks, like they could have, because like just last year, right? Basically, my Tesla position went down basically like a 60-ish, 70%, or how much.
Yeah.
Now it went back. If someone understood this, more in-depth mechanic, I mean, that would be amazing, right?
Yeah,
but of course,
I don't believe that those people exist. It's
yeah,
you can. Well, I think that's when you become sort of like, I think that's a step 0 or 1 or 2 of becoming a real investor, when you understand you cannot time the market. And when I started, I thought that you could time the market, and I was super much into technical analysis and this, that, and blah blah blah. And yeah, when you truly understand that even Warren Buffett and the biggest of the biggest cannot time the market, I think you make a very big advancement. You go from like a Jedi Padawan to like not a master yet, but close to a master. And hey, Jeremy, he sold all his Tesla stocks and bought a lot of Tattooed Chef from it, and that I think he wishes he would have kept his Tesla stock despite all the volatility, no?
Yeah, definitely that argument could be made. That being said, he didn't sell all of the Tesla shares, and he
Yeah,
actually really timed it very nicely in 21. So the Tesla move itself, that was definitely a good one. Of course, then there are, we never hit 10 out of 10. But maybe one more point that I would like to make about timing the market, because in a sense, when you look maybe in like the technical analysis, and I started basically with this very Buffett approach where uh, I don't think you can necessarily time the market. Of course, you can understand a little bit more about valuations to understand when to go maybe a little bit heavier, where maybe a little bit scale back. But over maybe the last year or so, following some people, I realized that technical analysis to some extent works because there are so many people that basically follow it, and it's kind of like a self-fulfilling prophecy. But the fundamentals always are stronger, right?
yeah. I mean, look,
Plus,
yeah,
additionally, when you are obviously trading in and out, you're creating, of course, taxable event,
yeah,
which kind of
yeah,
feeds into your profits, which makes it not viable strategy for me. And that's also another reason why,
yeah.
so many people lose the money, because you don't need to be just correct, 51% of the time, but actually much more, right? Because even if you are correct, you still have some of the profits, you have to pay taxes, and then it gets trickier.
Yeah, I mean, look, on the technical trading, because as I said, I started as a technical trader, and it is a probabilities game where it's sort of rigged in your favor. So you will be more times right than wrong. My problem is that when I was doing the technical trading in 2021, I made a lot of money, right? Like way out did the S&P 500. But the problem was that when the market turned and it became bearish, I way outproduced the market the other way. So like I lost all the gains. And to be a technical trader, I was basically 1 hour every day, looking at the close of the market, and then, practicing on the weekends, reading up strategies. And then in a 2 year period, on the bull market, I outbulled the market. On the bear market, I outbear the market. And in the end, I had a market performance. And I literally looked at, if I would have spent that time working in McDonald's and just would have bought the S&P 500, I would have made more money.
Mm.
And this is when I was like, okay, fuck the technical trading. I just go, like, instead of spending all this time, I spend it on my company to try to produce a lot of money. And 15% on $1 million is more money than having 30% on $10,000. And this is, I feel that a lot of investors, they chase the percentage and they go for like trying to reach the highest percentage, and they forget this, that but if you put more money into the stock market, you will way outproduce someone who has no money on the stock market and has a very high return. And I think that a lot of people go wrong here. And on the technical trading, then I started to speak to my dad about this, and we have the portfolio together. And when we were starting to buy Palantir, he was like, we cannot buy it, it's in a downtrend, the technical analysis doesn't let you buy it. And I said, look, we're not technical traders anymore, this is like good value, we are buying it, right? Then it went down to $10, and he was sort of like, you see, I told you. And I was like, okay, we buy more. And he's like, but why don't we wait until the technical indicators, And then I was sort of like, shut up, we just do this now, Then it went down to 8 and 6, and we kept buying, And the point is that when the technical analysis was telling us to buy, the stock was back at $12, but our cost basis was like $8 and something, right? And to be honest, had the stock been going sideways more, I believe that we could have built out an even bigger position. Like if you follow this fundamental strategy that you're buying the stock when it's on a discount, and you buy more the lower it goes, you will end up you will have this again, that you will have a huge amount of money, and then when the stock goes up, you will have a very nice percentage on a huge
Mm,
amount of money, as opposed to having always the little money, like, oh, now I'm up 5%, okay, now I can sell. So when I say the technical analysis doesn't work, that's what I mean, that your the time investment that you put into it is not worth it compared to just,
mm.
yeah. I basically bought Palantir, held it, and I'm up. I think if we close well today, I might be up 100%, and I'm just holding. Like, I'm not doing anything.
Yeah, exactly. That's kind of the beauty of a long-term investing, right? That we still have, those 40, 50 hours for a regular job, maybe,
Yeah,
10, 20 hours for the family and everything. And then we just, keep in touch with the market for those 5, 7, 8 hours, and that's kind of enough, right? So really kind of the approachable for really everyone. Of course, if you want to like really get those 20+% compounded, get somewhere, Warren Buffett, Bill Ackman for the long term, then of course you need to focus even more. But with those 5, 6, 7 hours, I mean, in my mind, as long as people are focused, we can definitely beat the market with a certain margin, right? And even if that margin is relatively, just a few extra percentage points, hey, maybe market's doing on average like the 10%. If we do maybe, hey, 13, 14, 15 over the course of 10 years,
yeah,
if you
it's
invest
huge.
consistently, that's a difference in hundreds of thousands, millions eventually, right? So
Yeah.
like that every percentage points counts.
I know it's so funny how every investor knows, like, we should be investing in index funds, and then somehow, like, everybody that I speak to just invest in stocks, and it's like a sickness also for me, because for me, even if I don't beat the market, like, I'm the same as the market, it's like, at least that's like what I did, like, I wasn't
Mm,
effect of the market somehow, like, this was my choices, my due diligence, and I don't know, it's a weird sickness. But
mm. And
yeah,
it's
go ahead.
also, of course, there are these sayings that, hey, 99 or 95 or how many people do not beat the market. So you should just invest in an index fund. But then it's also, kind of the why those, 95, 99% people don't beat the
Exactly.
market, because they don't actually put in the time, right? They listen to Jim Cramer on CNBC or something like
Yeah,
that, buy
yeah,
some random stock, or, for whatever reason, right? They might hear it there, or just kind of randomly, okay, this is a blue chip. People, Coca-Cola looks nice. They just buy something without that underlying thought. And it's only that small percentage of people that are actually serious about investing, right? And maybe from our side it looks like it's everyone when we are in our stock market bubble on Twitter and YouTube and everything, but we are still just this small kind of a sub niche of people that are serious about investing. If you kind of put it into the context of the whole, either the US, the world, we are still just a
yeah,
tiny
it's
tiny
actually
small.
such a good point. It's such a good point. I also wonder about this, because like, when you make Palantir videos, you get, like, I don't know, 1,000, 2,000 views. Like, if you get 4,000 views, it's amazing. And then you go, like, okay, those people are, the sort of like the creme de la creme, who is actually doing good research and is, willing to sit through, like, a random guy on YouTube talking about their opinions on, 15, 20 minutes about this a random company. And I think that that's somehow where the big money is. Like, I started saying that, of course there is these meme stock,
Mhm.
but avoid those. But then there is, like, the stocks like Tesla and Palantir and some other stocks that have communities around them. It
Mm.
actually very makes me feel very safe investing in those stocks, because you get people who are not analysts, who actually have their own money where
Mhm.
their mouth is in the stock, and their livelihood depends upon having correct observations. And it's just such a nice thing, and it's so weird that it's so few people who is actually looking at this. I think that is going to change. I hope it's going to change, that this is going to be like
Mm.
tens of thousands, hundreds of thousands of people in the future. But I think the YouTube finance and this finfluencing, or whatever it's called, I think is very, very new. I mean, your boss Jeremy is the first big guy in this space, and he started when, like 16, 15?
Yeah, if 2016, if I remember correctly. So yeah, it's still quite new, and it's also, mm, maybe lots of retail investors and these sub communities about Palantir, SoFi, Tesla. They often look at that research with a little bit more, I would say, creativity compared to traditional Wall Street, where of course on Wall Street you kind of have this traditional valuation model. You do some DCF, and kind of everyone on Wall Street kind of gets very similar numbers, right? You can obviously a little bit play with the numbers up and down, but it's that very conservative approach that doesn't account for often it's hard to account for innovation, right?
Yeah,
So
yeah.
of course with
And they
Tesla
have zero
manufacturer.
zero fantasy. Like as you said, it's like if a company is unprofitable, it's always going to be unprofitable. Like they don't have this fantasy that okay, the chart is going like they're losing this much money and now this much money and now this much money, and you just go like, okay, next quarter they're profitable. It's like they can't seem to think with that.
Yeah, because people, often, let's say, idolize Wall Street, or you have a couple of those movies where you see one of those geniuses, let's say, Michael Burry and everything. But that's again, same as there is, 5 or 1% of like the retail investors that actually put the time and effort into it. The same on Wall Street, right? You have a couple of those really great investors, kind of the
Yeah, it's
sharks
true.
that know what to
It's
do,
true.
and then the rest of the streets are kind of like the random guys that went through some MBA. Now they have a suit, and they
Yeah,
go
and
party
they
every
get
Friday with
half
their
an
bros.
hour, and they get
Yeah.
half an hour, and they're like, do a report on Palantir, okay, and then when you're done with Palantir, go over to this stock, and they
Mm.
never get to, because I think that the balance sheet and the PNL, like they don't tell you the full story. And for example, on Palantir, one of the things that made me, because I understood that they were losing money, right? But the
Mm.
fact that they were cash flow positive all the time, it was
Yeah.
like, okay, there's zero chance that this company could ever go bankrupt, and yet it
Mm.
was being almost priced for bankruptcy, or I don't know, it was priced as
Mm.
like this, yeah, like an AI imposter that is a consultancy and it's never going to work out, right? And I
Mm.
think that was a really big win for retail and all of us who was in the community, that we could see it, and Wall Street didn't see it, and it was a very, very interesting time to be an investor at that time.
Yeah, exactly. The market is still, we are just people, right? Whether we are retail investors or some hedge fund managers, which will always create some of these imbalances in the market. It's never 100% efficient. It's always tainted by some of the stories on a certain magnitude. Of course, the media are always making these waves and basically making it sound rosier on the upside and scarier on the downside, right? Which makes the market basically even less efficient.
Yeah, exactly. So another question, just curiosity, how did you avoid not investing into Tattooed Chef?
Okay. I would say I'm a little bit more skewed towards kind of technology companies. So it was simply a little bit outside of my circle of competence, I suppose. So, my portfolio is, Jeremy is more on that retail side, because he also made, quite a decent, let's say people sometimes forget some of the older successful picks. Let's say, Physic
The
Get Busy,
Elf.
Elf. Oh yeah, of course, Elf, right? 10x on
Yeah.
Elf, or a couple of those L brands back in the days. So he's definitely very knowledgeable about the retail, given his background. So he had some pretty good winners there. Whereas with me, I'm more enthusiastic about the innovation. So both Tesla, Palantir, SoFi, Spotify is in my portfolio, right? So a little bit of my personal preference.
Okay, cool. I mean, that's also what do you call it, like makes me want to look up to you even more, because you are in a, okay, not echo chamber, but I don't know if that's the correct word, but you are with a lot of investors who think very similarly. And even though that, I guess a lot of people were investing into Tattooed Chef, you could still like hold your own thought, and yeah. And I mean, the truth is that I understand why Jeremy invested into it. I was looking at that company also, but like, I mean, if the story that everybody's going vegan, it would have played out, he would have made a lot of money, right? So it was more that he was wrong on the story. And then, yeah, the rest, I think that they're bankrupt now, no? Or they are delisted.
Oh, I'm not really following. I suppose they are close and some fact checking along, but yeah, sometimes L is an L. And that's kind of also the natural, when we have maybe those 12 companies in a portfolio, you will have one or two that will significantly outperform,
Yeah,
Elf,
yeah.
Tesla. Then you have kind of this like middle section where the companies will do fine, okay. And then you have, maybe one or two losers. So, back in the days, I also had a couple of, companies that didn't really pan out as I intended. Or I might have, just sometimes, especially in my early years, sold some of the winners too soon, let's say. That was also, and actually more, if I would call it regrets, it's usually more that I've sold something that I should have held for longer. It's not really that I would
Yeah,
stick
it's
with
so
some
weird
company.
because if you sell a winner, like let's say you would have sold Tesla when you had a 3x and you miss out on the 10x, right?
Mm,
You miss out on 6 times the profit, right? But
yeah.
if you hold something that goes to zero, you only lose 1x. So you
Yeah.
would, like, you could try to find five more, like you can buy five other companies that go bankrupt to have the
Mm,
same as you just had on one stock that really went right. I think
mm.
that is, yeah. So for me, the lessons, I don't know in which order, but you can time the market, and then don't cut your winners, because those are more important to let them run than cutting your losers.
Yeah, and the tricky thing is that every moment in the market is only once, right? So sometimes it also
Yeah.
goes the other way around, because one of my basically, uh, one of my mistakes, let's say, was back in 2020 during this, the first Rona wave, kind of along the bottom. I was buying various companies at this point, and at that point it wasn't that thought through. It was more or less because, okay, everything was just so down and it was kind of easy to invest, but at the same time that didn't allow me enough time to thought this position if I really want to hold them for the long term. But basically one of those companies, or maybe let me start the other way around, because of course some of the companies, I bought in 2020 around the bottom, and then when I realized that, okay, maybe I don't want to hold some of them for the long term, I kind of sold them along the way, into the 2021 where there was the whole mania. But one of the companies I haven't sold was Revolve, which is basically like a, online retail, clothes. And they had such a great marketing strategy using influencers, kind of like these micro influencers. So they really nailed it during the pandemic. And that stock basically from that pandemic bottom to, all of this mania in 21, it almost 10x or 10x if I remember. And I basically wrote this. It's still in my portfolio. I wrote it almost all the way back to when it was back in
Ouch.
2020. It was just a
Yeah.
small position, but could have been a 10x if I realized that, hey, all of this demand was kind of pulled forward, through the pandemic. Uh, and now they are in. I mean, it's still a solid company. I mean, the management team's quite decent. They are doing everything they can. But it was just, kind of that one-time scenario with all the craziness in the market. So yeah, I just wasn't paying enough attention to that one particular position, since it was just basically this one of the smallest position in my portfolio.
Okay. Okay. Yeah. I mean, I guess there is no such thing as perfect. We will all make mistakes and continue to make mistakes. And cool. Another question, Palantir. So what you that is both of our biggest position.
Hmm.
How long are you holding this stock? What do you think the stock is going to do? And yeah, just tell me your thoughts about this.
Yeah, 100%. So I basically made it my biggest positions kind of throughout the last year. So, just building the position over a longer period of time. And that's mostly because I'm kind of seeing maybe like the similar signs as was with Tesla back in 2018, where lots of the appreciation happens when the companies are really getting that operating leverage. They are basically keeping the expensive somewhat flattish, and their revenue is just growing. And then you have this huge divergence that, okay, this whole middle portion basically means, better margins, more free cash flow for whatever, right? More acquisitions, return money to the shareholders. Then you kind of get these companies like, let's say, Google, that are just, churning the money from obviously the search, that they almost are at a point where they don't know what to do with the money, right? So that's that ultimate scenario a couple of years down the road, hopefully. And it also, with Palantir, really starts with the product, the kind of work that they are doing. Because I guess almost all of us that are, let's say, listening to this, we work in some company, and we kind of, are somewhere, this one piece in a company, maybe at various positions throughout any enterprise. And maybe when we, do our work, we see those small little pieces. Maybe this could be improved. This is not really efficient. And I'm doing this thing kind of over and over. Could we like automate it somehow? And, for like a regular person, unless you are some, kind of the really taking care of your position, doing the management work, trying to do everything to make it valuable. Maybe you have some cool ideas, but okay, then you have to talk to your boss, and like organizations are often so inefficient because of so many various reasons, where of course on one hand you have this maximum inefficiency when you talk about government, right? Obviously it has its place, but at the same time, whenever government decides to do something, it's 10 times more expensive than it would be in the private sector. And then you have on the other hand, you have these extremely efficient companies, as for example Tesla, right, where Elon Musk is really just trying to bring everything down to almost cost of the materials, make everything super efficient. And most of the companies are somewhere in between those extremes, right? So especially when you have some of the little bit older companies, some manufacturing, right? Or you have some, lots of logistics. You have the airlines, you have the railways, right? So lots of these things can be just made much more efficient. And just imagine how much value can be unlocked if you just make the all railway operations in a country 10% more efficient. Like how many billions are we talking about, right? Sometimes the scale could be just immense. And then of course Palantir, if they do it properly, of course they have their challenges with go to market strategy, sales and everything. But let's say they save 10 billion here, 10 billion there, and capture, let's say, 10% of that value that they unlock. Okay, now we are really talking. But it's a long process, and sometimes it's especially those, of course, on one hand government, but even those older companies, it's kind of like this committee type of directorship, where lots of these changes are just hard to push through. So that's what Palantir's fighting with, and they will probably continue to fight with it for the rest of the decade.
But that's a moat, I think. It's because so many people look at this as a problem, and if you read Peter Thiel's 0 to 1, he says that the time that it takes to build up a company is the time that it takes to destroy it. So if your company went like from 0 to bang, super profitable in 1 year, that means that you can have another competitor on the market within 1 year that can fully destroy your company, right? And if it took 20 years to build up Palantir to become profitable, it means that the competition will also need 20 years, and there's nobody doing that. Like then Palantir will be, too much ahead. I'm sorry, I interrupted your Palantir.
No, that's a good point. I haven't actually considered, and I should have known. I actually reread 0 to 1 quite recently. But yeah, in my mind, Palantir could sometimes be a little bit more aggressive, which they now, it seems, with AIP and all of these, boot camps. That's kind of, the Code Strap was just writing about it or tweeting about it. So, who am I, right, to obviously judge some of these decisions from Alex Karp and the management? So I think they are roughly doing what they can at this point. Of course, could be a little bit more nimble with that. Yeah, the go-to-market strategy. That's kind of like that. Only small snippets. That's not going as fast as I would have imagined. Because also, back in since I was starting to watch the company when it went public, there were this kind of rosy targets, but it was kind of all thrown away with the inflation, the COVID.
Yeah.
So that destroyed the strategies for lots of the companies, right?
But my question is, how long do you plan to hold that stock, and what do you think? Because many people think we're back close to $17. I'm actually going to check how we closed. Yeah, we're closing in on $17 again, and many people think that it's the real value is around $12, and so we're like 50% overvalued. And is that something that scares you, or are you just happy to ride the volatility and you're planning to hold this the next 10, 15 years, or as long as they're reporting good numbers, you're going to hold it? Or
yeah, basically that last part, right? I prefer, as long as the companies are performing, I intend to hold them for as long as possible. Really let that compounding do its work, similar it did with Tesla and some other positions. And that's mostly, and of course, there is the performance of the business, and then there is the stock price that's oscillating. So when Palantir was 6, 7, you could have made so many arguments why it's undervalued. Now, based on the current numbers, you probably can make an argument that it's overvalued on the short term, right? So kind of like that fair value at this point would be, I would put it somewhere maybe at 12, 13. But that's just okay on the current numbers, right? Of course, over time, the company will get better and better. So I personally have, price target, I would say somewhat conservative, of 120 by 2030, if I remember correctly. I can go over the numbers if you want.
Yeah, sure, why not?
Then let me pull out, I have it on Twitter, so we can just basically go to my highlights if you pull up my screen.
Yeah.
Because it's also, again, relatively simple napkin math. So basically 120 per share, roughly, obviously rough napkin numbers, that's the way I do it, by 2030. So how this could happen in theory, right? So basically at this point, the average trailing 12-month revenue per top 20 customers is somewhere, 53 millions. That's obviously the top 20. But if you calculate the average at the moment, basically, hey, Palantir has this year 2.2 billion in revenue, which comes from 391 clients. And that means that 5.7 millions on average per one client, right? So, really just taking the average. And then the question is, okay, in 2030, obviously with inflation, of course, they are trying to sell clients more and more and more of their own different offers. So I don't think it's unreasonable that by 2030, the average revenue per client can roughly double to 9.4 million per client, right? Because also that revenue per top 20 clients is also rising steadily, and basically, and it
That's
doubles.
very surprising to me. Every time I look at the number, I'm like, it cannot go higher. And then now it even like re-accelerated, and I'm like, Jesus Christ, what are they bringing to the table that these? I mean, it's nuts.
Yeah,
So I'm very
exactly,
happy
right.
for that.
So basically, just over 4 years, the top 20 clients went from 20 million to now those 50 millions, right? So it doubled in 4 years for top 20 clients. So again, that's why I think that 9.4 million for average client is somewhat conservative number. Of course, if you want to invest, run your own. To what extent do you think they are realistic? So that's the first piece of the puzzle, right? When we kind of want to calculate that revenue, and we know, okay, this is the average per client, and now how many clients? So this year in 2023, Palantir ended the first quarter with 391 clients and added 30 clients in the second quarter. So roughly 120 new clients annualized. So that's 38% year over year. And remember, let's just be a little bit more conservative. Let's say they add 20% more client each year. So if they did 120 this year, maybe they will add 144 next year, 173 the year after. So not even that exponential growth, right?
Yeah, it's funny because I was going to say that it's quite a linear growth because every year, yeah. So it's like even though the number sounds like that it's more every year, I think percentually it's maybe even decreasing because when you have 500 customers and you add 144, that's only like a 28%, as opposed to when you have 400 and you add 120, it's like a 25%.
Exactly.
So it's a very good calculation.
Yeah,
Continue.
good catch, right? I'm only basically multiplying that addition of customers, not the whole numbers, which
Yeah.
again, kind of trying to keep it conservative, even though we end up with quite some interesting numbers. So we basically put these two together, and that means that by 2030, Palantir should have somewhere around 2,000 clients, and each of them paying around 9.4 million. So we are somewhere in the vicinity of 18 billion in revenue, right? In 7 years, right? This is like a long-term target.
It's funny. I never looked at it this way, and it's quite a good calculation. Like because it's funny. Like, and I look at it, I'm like, okay, where I see that you're very conservative on the number of customers because it could be that they discover other uses of Foundry, but then maybe the average price will not be as high as you're calculating, but it sort of evens each other out. So you're counting with higher average number but less customers, and yeah, very interesting. Yeah, continue.
Yeah. And so, of course, we have the steady gross margin, 82%. That means, okay, from those 18 billion in revenue, we are roughly at 15 billion. And then there is that beautiful thing of operating leverage, right? So basically, if you look at the operating expenses, they are basically flat since they went public. And that's also actually, let me pull up one more chart from Arne. Shout out to Arne, who is doing these amazing Palantir bullets. But this is what we are talking about, right? When we talk operating leverage, Palantir is basically being flat in the research and development and basically the operating expenses while growing the revenue. And then you have this beautiful, divergence once again, which then basically translating into the long-term numbers that roughly translates to another thing being kind of conservative. I counted by 2030 the operating expenses will roughly double to 3.5 billion. That's maybe something that might be a little too aggressive. Maybe try to play with your own numbers. Maybe it might be more, but that gives us roughly 11 billion of net income, which is roughly 4.5 earnings per share. And at somewhat conservative, I would say 30p ratio, similar what, for example, Google, Microsoft are having these days, which again, I assume it's kind of in line with the market. We might be somewhere in the 137 per share. So, it's not 500 like Tom Nash, but it's still basically 35% CAGR, right? So, basically triple the market. We'll see. Let's check back in 7 years.
Yeah, I mean, it was a very interesting, very interesting way of looking at it. I liked it. I never looked at it this way. The only part where I have a question is because management is saying that their net income percentage is going to be 20-25%, right? And I can see that you're calculating that on 18 billion revenue, they will have 11 billion net income, which is it's like a 60% net income, which would make them like one of the most, or maybe the most profitable company ever on and like I think maybe that is a bit too aggressive. I would maybe even count with half of that, but then still you have a $60 with your logic, you still have a $60 price target, which is still very nice. I mean, we were at $6 a year ago.
Yeah.
So, and
because then what I think might happen, because if, for example, people study, let's say, Google very clearly, like if Google didn't bloat into this, like they have so many employees on so many various projects that are not really profitable, they are like, if they really focus on advertising, search, they would have also such a crazy margin. But then you become a target of the government, with such a huge margin.
Yeah.
So also those huge companies, they are almost making themselves less profitable by design, right? So
Yeah.
if something like this is kind of playing out, I would imagine Palantir, either rises those operating expenses, try, doing some more research, doing maybe some acquisitions, or, basically either do some more buybacks. So they cannot really, let it be as
Yeah.
efficient as it almost could, right? So there is
Yeah.
this natural bloat that is
Yeah, I
almost
mean
inevitable.
it's really, I mean I do believe that you are very conservative on the number of customers, because if they, many people are hoping that they will figure out a way how they can, have like they can go lower to like mid-sized businesses, because right now they're basically only going after like huge governments, and then they would have thousands and thousands and thousands of more customers. And yeah, that could completely offset. That could be a very nice surprise, but very good angle to look at Palantir. Very interesting. Cool. Then I was thinking to ask you, what are the stocks that you are researching now? Because you said in the beginning, if I'm not mistaken, that you're planning to add 2 stocks this year. Maybe you have already added them, but I'm just curious, like what is in your pipeline that you're doing due diligence on? And after that, I want to pitch a stock to you. I want to see what your opinion is on one stock.
Yeah, definitely. Let's do it. So the 2 new companies I started adding this year is AMD and Spotify. So kind of really just high level thoughts is basically with the AMD. It's kind of this overall trend in semiconductors, data centers. It's basically mega trend, obviously, with data processing and everything. So and then it was simply question, from which way you want to play it, right? Is it more Nvidia, is it AMD, is it ASML? And Nvidia kind of had this amazing opportunity where they really hit it nicely with this AI alignment in terms of their products, where AMD is a little bit doing something different. But and shout out to Antonio Linares and his research, but he basically points out the way how AMD is producing the chips with kind of like that modular chiplet design is just much more efficient with the higher yields and everything. So where basically Nvidia is producing these super high end chips with super high margins, the AMD is basically being more efficient. And over time, when AMD can figure out how to make also such a, like a high level chips, there is high probability that they might a little bit like out innovate Nvidia. But both of those companies are kind of, and semiconductors in overall are moving in these like a bigger cycles. But each new low, let's say, is still higher than, let's say, in the previous cycle, right? So it's kind of volatile ride, but again, it's to the right and towards the top. And with Spotify, overall, definitely very bullish on audio overall. And they are really at this point, it's almost, in terms of an investment, it's still almost like an venture capital type of bet, where they are not really significantly profitable at this point. They are in a solid position, solid balance sheet and everything, but at this stage it's really about acquiring more and more and more users, and at some point just monetize them better and better. And actually Spotify recently, they released the audio books, that a new vertical for them. So basically, kind of really the thesis in let's say 30 seconds, it's, hey, we have more and more users, the growth is great. And once we have, now they are at 500 million, I think, if I remember correctly. Once they get maybe to 1 billion, then of course you can also monetize those users more and more. So at this point
So
it's still
Spotify for you is this classic play of like going in like a few quarters before profitability, basically.
also that. and they have this long runway of still getting 500 million users. That's still relatively modest number for a social network, right? If you compare it to, let's say, Meta with 3 billion users. So even if, hey, Spotify is maybe getting, and I have also a couple of my numbers where I was basically comparing the growth of Facebook and growth of Spotify from when they had like 100 billion users
Yeah,
into 500 billions, and they are roughly at the same pace, right? So it's almost like investing in Facebook many years ago. So I'm not sure it's going to be such a huge winner as, for example, Palantir, but I really like companies that you can kind of see the path many years into the future, and you see that there is probably not going to be any reason for you to sell as long as they will continue adding the new users, continue to monetize them. So I don't like, for example, some of like the cyclical companies where hey, maybe something is undervalued at a certain point. It might get re-rated to the like the more normal number, let's say 2x's, but is there opportunity for it to 4x, 5x? No, it's just a
yeah,
re-rating, and then what's next?
yeah.
Then you sell it, and then you have to find a new one. So I just prefer companies that really I can almost forget it for, or just like check it a little bit.
Yeah, makes sense. Makes sense. Cool. So, have you heard about a company called Rocket Lab?
I'm looking forward to this moment. So tell me, because I've, obviously read some headlines, very surface level. So my first thought is, obviously super amazing in terms of the vision, but my immediate second thought is, oh, okay, this is probably quite speculative. So what's your take?
Yeah, I mean, I would say that it's probably a risky bet. So I agree with this. But as when you study a lot about something, like it starts to take out the risk, and it seems like you like the strategies, to go into a company like just before profitability. And I would say that based on this conversation, what I like is being able to study something that is maybe more complex that Wall Street doesn't have the time to do, and then you're able to be there before like everybody else comes in. And at first, when I heard about Rocket Lab, I thought that they were a joke. I was like, why are you even doing this? Like SpaceX is already in this space, and like they win everything, right? And I was like, this company is just going to go bankrupt. It's a cute effort. So I think it was a month ago when I heard about it again, and I was like, they're still alive, and they went SPAC. Okay, this must be one of those scam things. And then I started looking at the company, and I was so positively surprised. And so many things that I thought about the company were not true. And for example, they are not really competing with SpaceX because SpaceX was the first one to go into the I don't know how much you know about space stocks. You know
Yeah.
that they had the Falcon 1, which was like a very small rocket,
Yes.
and then they basically blew up 3 times, managed on the fourth time, and then they abandoned that rocket and went to the Falcon 9.
Yeah.
And when SpaceX was developing as a company, at that time the satellites were still huge, like very, very big. And the problem with those is that it takes a commission. Like, for example, if you're going to do Hubble, you need a commission that designs it for 2 years, and then somebody who manufactures it for 3 years. So it, like, in those 5 years, it's already obsolete. So when you're ready to launch, it's like the technology is already too old. And then it costed you billions of dollars. And then when you shoot it up, it needs to operate for 20 years. So you're like starting with something that is like super obsolete, or I mean, not super obsolete, but obsolete. And then you have to use that obsolete tech for 20 more years to come. And there has been a lot of advances when they realized that, yeah, like we can have these small satellites that is like shoebox sizes, and it takes like super short time to design them. You shoot them up to a smaller orbit, and then they deorbit, like they get used up after 3-4 years. But it's so cheap to shoot them up that you're like 100 times better off than having like one Hubble. You can instead have like a Starlink satellite, right? And the point is that this part of space, like the shoe size satellite, is blowing up. Like there has been like I think 2,000 from 1980 to now, and now they're planning to have like 15,000 up in the sky in the next few years. And SpaceX is not in this space. Like they're like, yeah, fuck that, we're going to Mars. Mars needs big rockets. And this is the only company. There is other competitors, but they are like launching 1 or 2 rockets a year, and these guys are launching like, I don't know, 30, 40, right? Then the second one that makes me very excited is that they have been acquiring a lot of other space companies that was manufacturing satellites and operating satellites, which gives like very steady income, because like the rockets, they can blow up on the pad, and then it becomes very like no predictability on income. And when you have these two things together, so you can make your own satellites and you can very cheaply shoot up your satellites, you have a third thing, which is you can have your own like infrastructure in space, right? And if you remember SpaceX, they have Starlink, and because of Starlink, their valuation went from like 30 billion to 150 billion. I don't know if you follow this, right? This company's valuation currently is $2 billion. So it's like they're working like on the same thing, a little bit differently, because everything is smaller, and they're going to have their own like space infrastructure. They're working on all this cool stuff, and NASA has this thing that they want competition in the rocket industry. So if they would see that this company is going to go bankrupt, they would like give them contracts to make sure that SpaceX is not the only one, and there is competition. So it's like even the fear of bankruptcy is very, very minimal. On top of it, they have like 400 million in the bank. They're only burning 40 million per quarter. And I think that they will become profitable with the money that they have. I don't think it's in the next 2 quarters. But yeah, so this was like, sorry, it was a longer than an elevator pitch, but it's so my point is, it's not so speculative, because I think that they would have a very easy time to raise money. NASA wants to keep them alive. They're doing fantastic, and it's a huge undiscovered opportunity by Wall Street, and it's very easy to follow this stock because there is all these space enthusiasts and space YouTube channels, and so it checks all my boxes.
Okay, definitely. That's interesting. And, I definitely see the overall reasoning. For me,
Matt
basically.
Money, I just want to say hi to Matt Money, and you need to answer my message on Twitter. But yeah, so go ahead.
Yeah, so I see the overall reasoning. The next step, basically, if I would be to pursue this idea further, would be really looking into that profitability, when it might come, and how does it look, right? In, maybe those, let's say 3-5 years out in the future, that's maybe something that we can address with a certain degree of certainty, right? Be at least directionally correct. And then what the market basically might slap on that, once it's profitable, what P ratio it could in theory have. That would be the next step.
Yeah, I just wanted to give it as an idea. Of course, I'm not trying to close you on it. I was just, I'm in this honeymoon phase when you like find the stock, and then you're like, this could be something good, and then you research it, and then you're like, yeah, checks out, and then it just keeps getting better. So I'm like, oh my God, I need to find money how to build this into a huge position for me. Yeah, cool. I really enjoyed our conversation. I think this is like a good point to end. I don't know if you want to add anything.
Definitely, that would be all from my side. Thanks for having me. Thanks for everyone listening. Hope be a little bit, make it enjoyable and enlightening, given some of the market experience.
Yeah, exactly. And maybe we can do this again in the future.
Definitely, would be my pleasure.
Awesome, Ondrej. Have a beautiful weekend, and speak to you on Twitter.
Take care, you all.
All right. Yeah. Bye-bye.